So the reason why most traders fail is because they constantly are using the wrong tool for the job. It kind of baffles me every time when I look on the Twitter community and I notice that a lot of these traders that are trading options are talking about using graphing indicators. They're talking about different sorts of trend lines, different sorts of details like that to explain their option thesis. Now, as option traders, there's three things that impact the value of an option contract. That has to do with the implied volatility, the time to maturity, and the current value of the stock in relation to where it is at, because the option value is based on the underlying price of the stock. So there's three things that impact the value of that. So in this market recap, we're first going to be discovering how we did in the room, how we managed to call out these beautiful limit order trades that gives everyone the opportunity to get into the trade and that specific detail. And we're going to be sharing the lesson with you guys today about option premiums and how we analyze them. We use graphing tools to pretty much illustrate our key setups so that we understand what the premium is when it hits that key point or pivot point. But we use option premiums to understand the best detail worth of entry, because options is time sensitive and you want to keep that into consideration. You want to make sure you have the right calculations and the key details before making those key decisions. Now, let's get straight into it, and we're going to be talking about our analysis that we had for today. So we'll start off with our key notes that we had. So basically for this week, we were doing very well, and pretty much we analyzed the market's current situation. We noticed that the yields continue to drop, and one of the key things that moved the market, as we mentioned in the morning emails, and definitely you do want to subscribe to that, we mentioned that the Bank of Canada lowered their rates. We also knew that semiconductors had a lot of events and a lot of catalysts this week as well. So we mentioned that the key range that we see for today is a bullish trend, and that the max upside we see here is 53.50 today, and it probably start to shrink once we gap beyond 53.30 and 53.50. This is key to remember here, because you guys got to know this is at 8 a.m. Okay, this is before the market even opened, and I was able to tell my team exactly what range we're looking at for today. And this benefit comes from analyzing option premiums. So by using this information, I can tell you how the range is based on option premiums. It's definitely very helpful for traders to use this key detail. We mentioned that if SPX has a hard stop at 5,300, and if that breaks, we're likely to see 52.20. Now let's compare that with what happened for today. So if we look at our SPX chart here, you can see that the only time SPX ever went lower today was in the morning, and that was right over here. We actually had calls at that opportunity, and we definitely played the upside along the way. So our first inflection point, level 1 bullish, so let me get rid of these pivot points because it's getting in the way, got broken up at around 10:30, and we seen a little bit of a pullback right at our level 2 bullish. We sold most our stocks from that point on, and we got back in and took it way up. Okay, so the key thing that was moving the market today was definitely semiconductors, and the Bank of Canada was definitely one of the fuels of today's market here. Okay, so you can see that over here. Now in real time, to show you my levels, because every morning I give levels too, I said 53.57 would be my top, and 53.50 would be the key top as well. Now let's look at our trades before we go into the lesson, because it's important to understand how I align my trading with my overall callouts that I give in my room here. Okay, so we definitely did have some puts that we swung overnight, but those were actually rolled with profits, and I use them as a hedge. So besides all that, we started off the day with these key plays here. Okay, so let's take a look. So that was yesterday. This was today. Okay, so we basically started off the day by buying SPX 5280 puts for a quick scalp, because we knew that when we open at level 1 bullish, there would be a dip. That trade was well executed, and we made a nice 30% profit there. Okay, because it was meant to be a scalp. We knew today the strength was going to be on the upside. So we put an order to buy ASML 1050 calls because this stock was on our watch list, and this opened at around $4 to $5. We didn't want to pay that much, and the reason why we liked ASML is because the news that they pretty much said that they're the leader in the AI, and without their machines, you cannot make advanced AI stuff, AI chips. So that was fueling the market here. Okay, we also bought ARM 133 calls. So once we got the fill at 2.5, these immediately went to 30%. So it would have been a proper scalp, but we wanted to hold it. We put an order to buy a bunch of calls there. These didn't fill, so we ended up getting the 5360 for tomorrow, because that is our estimated weekly high. So once the order was placed on ASML, we basically sold them, and we made a nice profit there for 84%, and then we got in again, and we waited for that. Coin didn't fill. We sold our ARM calls, so a bunch of trades actually did very well here, and we bought SPX 5350 calls as a roll up at 1.63. We even mentioned that 0.5 was the best entry. We later sold that at 130%, and then we placed another order at 50 cents at 249, and we took Lulu calls on puts on puts, and these are gonna fail most likely. It was a pure lotto. We took GME, and these are gonna rip. That was because it was a squeeze. They went up fast, 30%. We're still holding them overnight, but we got the fill last minute on these degen calls, and look at that, guys. We mentioned that 50 cents was a strong support, and to give you guys an overview of our trade log, this is how it looks. These trades that we had on Monday, these SPX puts, actually did very well, but I had an error with my broker. Wouldn't let me sell pre-market. They were actually up around 400 to 500%, so that's why we are looking while we're looking. But you can see all these trade logs for the month of June. We've been fairly consistent. It's just these trades that I didn't execute right, but they were actually winners. Okay, so besides that, let's get back into the lesson here. Okay, so SPX pretty much closed near my highs here. If we look at the chart, we are close to my estimated weekly high, and my prediction is we probably will see SPX open slightly in the green. Nvidia broke through my top range, and this stock is very strong, continues to move forward. You can see here the accuracy of using option premium. So these levels that I've developed, these ranges that I've developed, as you see here, I've always perfected to pretty much find the key inflection points by using option premiums. Okay, so pretty much we found that 820 was a tough level. You can see that it rejected right off here, and you can see that SMCI held this point. It's very possible that SMCI can go back to 761 if it can't break through there. And pretty much you can see that ARM is close to my top. Once it broke through 133, it started to rip. ASML has a lot of room to push. It pretty much opened above my estimated weekly high. The news is bullish, so it's very possible it could go to 1060. And GME we're also watching as well. But you can see here that not only do I call the ranges, because not only do I call the correct points, but I also managed to give the perfect idea of what the behavior of this play is going to be. So I can tell you that this is a bullish breakout zone, and this is a bearish breakdown zone where you start to see a lot of things break down. And this is given to my members at the beginning of the week here. Now, besides all that, let's get into the lesson at hand and discuss how you can analyze option premiums. Okay, so this is one of the tools that I use to pretty much do this. So the first step you got to do when it comes to analyzing option premiums is you first must have your watch list set up. You must wake up at least 1 to 2 hours before market open to prepare your watch list, which is going to be crucial. If you do not have your watch list set up, then you're not going to do well. So based on my gamma report, which I won't share with you guys on how I calculate and get these ranges, I want to share with you setting up your watch list and analyzing the premium. So the trade that we're talking about today is the 5350 call here. Okay, so this is an option premium graph. By connecting the watch list here, I can get a visual representation of the option premium that I'm looking at. And this is going to be very crucial to know about, because when you're to see a visual opportunity as an option trader, like I mentioned before, is not just about technical indicators that you're using. You have to find the right price at the right time to basically certify that. I gave ASML order. So the ASML 1050 call was on my watch list here. You can see that pretty much we got in at it opened at around $4. So let's go into the morning because it was up a lot. So pretty much it opened around $4 here. And it definitely popped really high. It was $7 at one point. It made its way lower and then definitely climbed back up here. Okay. So we managed to pretty much take profits along the way. And you can also install indicators on your option premium charts. So while we were analyzing this, we noticed that it had an average of 4 on this key value here. So we want to make sure we always pay less than the average, because this is just a WAP here. So we got it in at around $2 and we took it here. So just to summarize here, if you look at the 5350 call here, the average was around $2. Okay, so our initial position was at 1.5 and we definitely got it at 50 cents down the line here, because 50 cents was close to the low of the day, and that's how we managed to do it. Okay, so overall it all comes down to option premiums. Using option premiums to analyze your entry is what you need to do as a option trader. Do not force trades by simply doing market orders on candlesticks, because if you chase candlesticks, you won't do well, and it's definitely going to be problematic moving forward. So I hope this market recap was enjoyable and gave you a lot of information about key lessons on how to read premiums. We will only be posting this on YouTube for now, so we hope you guys can subscribe and like this to get more lessons on how to read premiums and understand what's going on in the market. So we'll see you guys in the next one. If you guys want to take a trial into my mentorship program to get these limit order trades, join our community. Our Discord is free. Once you guys sign in, you guys have the opportunity to definitely look into that as well. So when we go into my free Discord here, give me one moment. Okay, so by looking at my free Discord here, okay, perfect. When you guys look into my free Discord, the link is in the bio. All you have to do is fill out this form, and then by applying for the 3-day mentorship trial, by saying yes after you completed all of this, you will gain access automatically to a 3-day trial, and you don't have to provide any sort of prepayment information. We just need to know your name, your email, your Discord username, and where you found us. Okay, so that's all pretty much that we need, and we hope you guys enjoyed this market update, and we thank you guys for tuning in. So see you guys in the next one, and like always, let's get that money.